All right. So hello, everybody. My name is Rodrigo Camacho. I'm CCO at Nethone, and I'm here today with Thomas. So maybe Thomas, you can introduce yourself, maybe.
Hi, I'm Thomas. I'm responsible for the commercial efforts in our payment company called Straal. I'm looking forward to meeting you all and discuss how we can help you increase your transaction rate.
Beautiful. So maybe, and I'll just introduce Nethone quickly as well. So Nethone is a payment fraud prevention provider. So both Straal and Nethone work a lot in, first of all, we work a lot together, but also we work a lot in the digital goods and services space. So this is the reason why we wanted to focus on this topic today, so we can look at how you can transact more on Straal side, and actually how you can also transact more on Nethone side, but from different perspectives. So yeah, like that's a quick intro there, but maybe, and Thomas, you can kick us off.
Sure, thank you very much, and welcome everyone to our today's joint webinar. As I mentioned, my name is Thomas, and I'm responsible for the commercial efforts of our company. We at Straal specialized in helping merchants improving their acceptance rate and supporting them with more than 200 acquiring connections when going global. So as Rodrigo mentioned, the webinar has two parts. The first part is the payment part, which will take around 20 minutes. And if you want to ask any questions, please feel free to send us those questions, and I will try to answer them on the fly during the presentation. If not, we do have some time at the end of the presentation where we can discuss all your open topics and look forward to have an open discussion with everyone. So on the agenda today, I will try to discuss with you why do some transactions end up declined, and how you as a merchant can effectively prevent or retry those transactions. And in the end, I will try to give you some useful tools and procedures which you can apply to get the most out of your transactions and to generate more revenue. So why do some transactions end up at the end declined? So looking at the average decline rate depends for sure on the merchant's vertical and the business model. But in the subscription-based digital goods space, we see decline rates of around 30% or even higher. And those 30% are pretty standard. So we believe the audience of this webinar might be interested in what we have prepared for today and how you can prevent those and reduce those decline rates. So the question I want to ask everyone, where you can think about, is like, if anyone of you has an approval rate of about more than 90%, if you do have so, especially in the digital goods space, I think it's a great achievement. And I hope that we will be able to provide you some insights, some useful inputs, how you can even make sure that you get that number up higher. So literally, it's quite simple. The higher the decline rate, the lower the authorization rate, and hence the lower the revenue and the higher the overall cost of a payment processing. As probably everyone knows, there are two basic types of declines. First of all, the hard declines. They cannot be retried. So once a transaction has a hard decline, one cannot make another charging attempt, and the payer might make another attempt to pay using the same card, but in the card on file flow, the merchant cannot retry such a payment. And there are soft declines. Those can be retried by the merchant. So looking at kind of what can we do with those hard and soft declines. So as I believe, kind of, you might know that most of those declines can be either prevented or retried. When it comes to a hard decline, prevention of those is crucial. When it comes to the soft declines, in my opinion, probably the way you retry is here crucial. So let's have a look at first of the hard declines. So if you look at the card stolen or lost, here basically to prevent those, a proper fraud tool and early warning systems on board are very useful and should be implemented. Invalid cards. So here, I believe it's very crucial for you to work with proper acquiring partners, because if you want to charge an Amex card through an acquirer who does not support Amex, this might become very tricky for you. So you want to work with the right acquiring partner for using the right payment methods. If a card is expired, this can also be tricky, but there are different solutions on the market, like for example, the card updater solution. So for example, if a card is outdated or expired, it automatically updated the expiry date for those cards on file and can easily be afterwards again charged. Then the suspicious fraud. Again, here fraud prevention tools are very interesting and should all have used or work with those, because they will help you to mark those payments as fraud attempts and help you to solve those. Beside that, from the hard declines, I think the only one which is really lost is the declined CVV. So here, basically, an acquirer or a gateway cannot do anything, because, obviously the card holder does not know the CVV, and this is most likely fraud, and you don't want to work with a fraudster basically using a wrong card. Soft declines. Here, I believe the most important one is the insufficient funds. So here also, again, the charging date and time, and also looking into users' historical data can be very interesting, because you then, once you understand, which I will cover a little bit later in the presentation, there are ways how you can overcome those. Exceeded card limits is also important, that you understand the users and the type of card, so you can look into changing the transaction rules on that transaction, on that card, and really can retry to do the payment at the most convenient time. And then last but not least, there is the technical error. If when gateway or if an acquirer is down, if you have a backup routing in place, you can route the transaction to a different acquirer. But due to the topic of the webinar, we want to touch basically also on how we can support merchants who want to go local, and what they need to take in consideration when going local. So I think, especially on the global expansion, I think the most two important parts is the cross-border shipping and the local market specific customs. But I want to also touch quickly base on the other points, like when customers use multiple cards. Some people, if you have multiple prepaid cards or virtual cards, you might forget to top up those ones, and they can all come to declines. Customers start using virtual and prepaid cards. I think like Revolut or N26 are offering those options, and sometimes customers use those for a free trial and never top it up with money. So once the free trial is over and you want to charge the card, it might be out of money. Then also there are transaction limits on those cards, either daily, weekly, or monthly. And last but not least, the fraud for stolen credit cards. So cards are blocked and cannot be charged, and those cards lead also at the end to a chargeback or potential chargeback. If we look at the main two parts, is the cross-border shopping. I think here it's worth to look at some numbers. So more than $900 billions is the predicted value of the global cross-border e-commerce in 2020. And more than 50% of the US shoppers reported making a purchase from a foreign site in the past. Foreign site here means a site outside of the US. Could be either from LATAM or from Europe. And if we look at the European market, there are more than 200 million European shoppers who actually buy from a foreign merchant. And how can we help, or how can the correct payment acquirer help you with cross-border shopping? So I think here it is very important that because there are different acquirers across different regions, and they're all specialized in certain regions. And some of those acquiring banks, they have certain risks, rules attached to certain transaction, especially when it comes to cross-border transaction. And at the end of the day, this will lead to some headaches for the merchants, because if you work with a Polish, German acquiring bank and suddenly the customer comes from the UK, they might not know, they don't have the market knowledge of the UK, and they, because of certain rules, they might start blocking transaction, and that's something what you want to avoid. If you look at the local market specific customs, I think here it's especially very important if you want to go global but act local. I think a very important part is, especially when you do subscriptions, are the certain paydays. In some countries, people get the salary by the 10th of every month. In some by the 1st. In Germany, for example, or Austria, people get paid by the end of the month. Credit versus debit. Germany, there are not that many debit cards on the market, but the majority is credit cards. But you need to look for other alternative payment options, which are more important. If you look for the UK, there are 90% debit cards and only a few credit cards. So I think it really depends on the market you want to work with. And also those different credit and debit cards, they have also some certain restrictions, meaning that, with a low value, it might be easier to get approved or authorized by a debit card, but a high value transaction might be blocked on a debit card because there are certain rules attached to that debit card. Anything else important here? No, I think those were the most important parts. So how do you effectively prevent or retry those transactions? So, by analyzing the detailed reasons code, you will be able to figure out what the main reason of the decline rates are. There are hundreds of reason codes why a certain acquirer, card scheme, and or gateway is blocking transaction. Some gateways try to cluster those reason codes together. And I believe the most general ones is the general declines and the insufficient funds. But you see there are all other restriction codes and error codes attached to that. And if you, for example, observe a combination of general declined, card not supported, and transaction, for example, not permitted to cardholder, this could be a reason why you probably most likely work with an acquirer who has a lack of the market knowledge, and they are not familiar with the rules in those markets. It might make sense that probably working or changing the acquirer or routing the transaction to a different acquirer might help you to increase the authorization rate. And I think that's the most important part, that you really work and look into those different reason codes why transaction fails. If you operate globally and process locally, if you look at the worldwide acquiring banks, there are more than 1,000 acquiring banks. They all operate on a global scale, but I believe I'm now in the payment industry since more than 10 years, and I haven't seen any acquiring bank being able to specialize on a global level. They mainly specialize in certain region and try to extend into a couple of other additional regions. But I think it's very important to work with local acquiring partners, because those will help you to have a better understanding of the local context. You will end up with less false positives, and also with a fewer number of issuer caused declines, which will help you. So on the example here, you see that, for example, if I don't know, let's take Germany as an example. If Germany is a very interesting market for you, working with a US acquirer will not really give you a great acceptance rate in Germany. On the other hand, if you work with an European acquirer, you might get some decent numbers in Germany, but working with a German acquirer, having the acquiring license in Germany, they will give you the best results. Another example, which I believe is a very interesting one, if you take France as a market, everyone believes that they can do or can deliver great authorization rates for France. But if you don't support carte bancaire and working with a local French acquirer, this will give you a higher acceptance rate and higher authorization rate, where you will earn more than just like working with a European acquirer. So I think there are different rules which you should start looking into. And here, kind of to paint the picture, if we have here as an example, like a German, a US, and a Brazilian customer who wants to purchase on one side, and all of them are purchasing this product through a German acquirer. Most likely, the German customer will be accepted. From the US one, because the bank does not know should they accept the payment or what's going on here. So literally they start doing a general decline. And from Brazil, the German acquirer marked the transaction as possible fraud, and because they are not really familiar with the rules in Brazil. And here, basically, out of 3 transactions, your authorization rate is around 33%, because you only are able to accept 1 payment from the payer of Germany. The other way is like, how can you do that with a smart routing system, where basically, depending on the customer's location, the IP address, and certain rules, what you might trigger out on a gateway level. So basically, the transaction from Germany would be automatically routed to a German acquirer, the US to a US acquiring bank, or at least a bank who is familiar with the US credit card situation, and the same applies to the Brazilian ones. So basically, with a smart routing system, you could potentially have a 100% authorization rate just with applying and implementing some certain rules. So what is kind of the most important part here, and how can you help and understand basically where does your customer come from, what kind of information you can collect from your users? I think here the most important part is I haven't seen any PSP who is able to provide you with all the specific data, but the merchants can collect the data on their own and really start looking into all the details and provide the PSP with as much information as possible, so they can really make sure that they can implement those information, what the merchant shared with them, and also apply that into their fraud system. So at the end of the day, the result should be that with all the data you have collected, that as many transactions as possible go through. And I think that will give you a bigger picture of what's going on actually in your market. So I would say there's relevant data people should really start looking into is the volume specifics. Second, the user specific. What can I know about my user? What is the email address, shopping address, software, which probably might also be interesting, and what Rodrigo might or will cover at a later point is about the profiling part. Then the card specific, and last but not least, also the transaction specific. And how can you really now try to optimize the process and manage the risk, especially in a subscription environment? So I believe there's again the charging time very crucial. So for a subscription base, really make sure that you start charging every single user on an individual level, meaning that based on their time zones, adjusted to their time zones, where they are from, where they're based, and really make sure that you charge them to the right moment, and also set retries with possible limits on the renewal time frame have in mind. Then last but not least, also the charging sequence. So, if a transaction being declined, you can split those declined recurring transaction into multiple low value charging attempts, meaning that, for example, it's like a 10 or 40 euro, 50 euro recurring transaction. You can have multiple 10 euro transactions to get to this full amount. Also collect the user information and try with smart charging intervals to optimize the charging time in the future, and really try to benefit out of that the most. Also very important, really try to use accurate fraud systems based on AI. And I think like also on the transactions and the acquiring mix you might have in place, if a transaction might be more risky or appears to be risky, try to route that transaction to a more risk-tolerant acquirer, because they might be able to accept those transactions. If you work with a less risk-averse acquirer, they might decline that transaction straight away. Also very important is that you monitor all those transactions, and that you are under any chargeback thresholds, and really try to understand and have a more detailed information about all those transactions, get as much detail as possible. And last but not least, make sure you have access to an early warning system, and if there are any suspicious transactions, do refund them before they turn into chargebacks. If we look at the useful tools and how you can apply those procedures, I've taken our gateway, Straal's gateway, as an example. What we have, so first of all, there are multiple integration options. There are, looking at the smart gateway, we do have multiple payment options, especially focus on open banking at the moment. Because I believe this will be an interesting topic in the next couple of months and especially years. I think all will move towards the open banking. Then credit card, debit cards. We do also have SEPA direct debits and multiple APMs. We have connected to our smart gateway the fraud prevention tool from Nethone. We also have the card vault. We have a subscription engine where we can define different patterns for subscription managing and the retries. We also focused a lot on transaction optimization and routing, how we can route those transactions that you get the most out of it. We also focus in Straal on the analytics and reporting tool. So it's called Compass from our side. It's the backend, it's the heart from our gateway, where we have a lot of transaction reports, where we have analytics, where you can manage all the transaction and get all the details as detailed as possible. And last but not least, as mentioned in the beginning, we do have more than 200 acquirers connected to our gateway. We have, I think, like roughly 4,500 different banks connected to our gateway, and have a lot of alternative payment providers. So in a short scenario, I think at Straal, we can help you collect payments, make sure that we boost your profits, we help you manage the risk, and also at the end of the day, payment is all about tracking the results. And the higher your results, the better it is for everyone. So we want to make sure that we help you to maximize your profits when you look into expanding into new markets and territories. And that was basically my presentation. If you do have any questions, feel free to ask them now or send me an email. And otherwise, I'm happy to pass the word over to Rodrigo.
Yeah, and actually, I have a question for you here, Thomas. From so I'm sorry, Andrei, because Tomaszewski. So Andrei Tomaszewski, who is asking, how do you optimize sales processing for prepaid and/or virtual credit cards?
Prepaid and virtual credit cards. So this is kind of a very tricky part, because, like, unfortunately, if a prepaid card has no money on the account, it's very hard to automate that. But basically, we are able to mark those cards as prepaid or virtual cards. So basically, if the first attempt fails, we do not do a second attempt, because obviously the card might be blocked, and we might ask the merchant or the customer to upload a different card.
So Andrei, if that doesn't answer your question, feel free to ping us again with a follow-up. For now, like maybe there's a second question here. So how many acquirers should I have to effectively collect payments in Europe and LATAM?
I believe you can always start with adding a new one. depending on how many acquirers you have at the moment. I would probably believe that, or in my opinion, probably to start off with 2 or 3 is a very good starting point. And at the end of the day, payment is, in my opinion, a purely number game. So the higher the transaction rate or the authorization rate, the more likely one of the acquirer will get the transaction or the full flow. But I believe kind of, working with 2 or 3 should give you the exposure. And then once you see the data all coming through, I would start looking at probably adding a different one for a specific region. Like again, if you're focusing on Spain, for example, to start adding a Spanish acquirer, which will have a higher acceptance rate. LATAM is again a very tricky market. Depending on if you do cross-border payments, I believe there should be also like again two where you can balance and do transaction between those, and really start looking into adding additional ones.
Okay, so there's actually a nice follow-up here, because I'm guessing that if you're going to be signing up more and more acquirers as you specialize more, like let's say you're growing in LATAM, you start off with 1 or 2, and then you start, let's say you notice that Argentina is particularly large for you, so then you want to start transacting and getting better rates there. And for that, I'm guessing you're gonna have to sign more and more acquirers. And here the question is just then, do you need to go through KYC every single time that that you're signing a new acquirer?
Yes, because I think like I can only talk about, and I think that's kind of the whole idea of this payment orchestration, is basically that you have one technical integration and they take care of all the connections on your behalf. So basically, if you do want to have additional acquirer in Argentina, as an example, and the connection is there, technically you can start accepting payments there. However, as you as a merchant are signing up or sign directly an agreement with the acquirer, unfortunately, you will have to go through KYC. However, if we do Straal assist you in that process, we have all those documents, the KYC documents on file, and share that with the acquirers, and it should be as smooth as possible when working with us, the onboarding.
All right, so if anybody has any other questions, feel free to send. If not, maybe we can go on to fraud prevention. Yeah, and feel free to send still questions for Thomas. Here we go. Yeah. Feel free to send us questions for Thomas if you want. If you think of any questions during my presentation, whatever it may be. So I'm just going to turn on my camera here. There we go. Okay, I think everybody sees me there. Okay. All right. So as I said, my name is Rodrigo Camacho, and I take care of anything that has to do with commercial endeavors at Nethone. And Nethone is a what we like to call a KYU company. So know your user. So we were talking about KYC just 20 seconds ago. So maybe I'll use that context to my advantage. So the idea here is the government has put forward regulations that make it so that you have to go through KYC, so that basically you know that there's no money laundering going on, and that if anything bad does happen, we know who did it. But for us, actually, in the world of the internet, it makes a lot of sense for merchants to start looking into this idea themselves, actually, regardless of regulations, basically. And one of these challenges, or one of the reasons for that, is of course payment fraud, but there are some other reasons that I'll touch on very lightly. But of course, I'll be focusing a lot on fraud prevention and payment fraud prevention in particular today, given the fact that we're talking about digital goods and services, which is a very particular area when it comes to that. What are we going to be talking about? So we're going to be talking about 3 things very quickly. Who's Nethone? What do we do? Second, why is it that fraudsters are so attracted by digital goods and services? So that then, and actually through understanding why it is that they're super attracted at digital goods and services, we can then use that as a framework to better understand how we can actually address those issues and solve that for merchants around the world. So who's Nethone? So Nethone is a team of 60. I think we're 63 in the last count. Tech enthusiasts, and when I say tech enthusiasts, mostly actually we're engineers. I'm not one of them, but actually out of those 60 people, you know, about 50 of them, actually 48 of them are engineers, and out of those 48 engineers, about half of them are data scientists. And all of this is going to make a lot of sense as we wrap up this to be able to understand why the company is constructed in this way. So as you can see, we're working with merchants all around the world through different verticals. So we go from Farfetch, for example, which is the largest luxury marketplace in the world, and they're operating completely globally, to Azul, for example, which is the largest airline in Brazil, which only does domestic flights actually in Brazil. And so as you can see, very different. So you have luxury goods, you have travel, but of course you also have, for example, Hellas Play or Grover, which are much more on the digital goods and services side of things, especially Hellas Play, which is working a lot more in the gaming space, where you're going to be able to it's basically a platform to be able to trade either game codes or be able to trade different skins and things like this for games. And we're also we've been part of a few different accelerators, and what's interesting about that is that then we've been exposed to a lot of different types of fraud through these partnerships that we've been able to construct, which always like, let's say, it's going to enrich a little bit of the context that I'm going to present to you today. So what is it that we do? Like basically we do two things very well. One of them is we provide payment fraud prevention. So for here, it's like basically we're going to get into a lot more detail, but understanding anonymization, automation, and suspicious behavior. But also, as we try to understand fraudsters, we're trying to segment the population. Of course, we're trying to try to understand how is it that we're able to segment your customers into different buckets. And as we started asking ourselves those questions for fraud prevention, we noticed that we were able to ask ourselves those questions for other things as well. And this is the reason why we're generalizing really in this KYU direction, where we're noticing that we can actually empower you to be able to use insights to be able to sell, either present a more frictionless, let's say, path for certain users, or actually introduce more friction for other users. So we've gone a little bit, like we've noticed that we're able to use the data that we're gathering, not only to do pure, let's say, payment fraud prevention, but also be able to help you increase your top line. So, and this is basically what we're trying to achieve here. So just to be really quick, I mean, like obviously reduction of fraud rate, of the chargeback ratio, but also we're taking a really strong look for us. The most important thing here is this last, I don't know if you see my mouse there, but it's all about the increase of the approval rate. So in terms of, and this really resonates very strongly to what Thomas was saying. For us, it's all about increasing top line, especially for businesses that are growing very quickly. And then, of course, like when it comes to these supplementary insights that I was mentioning, it's a boost of sales. So it's going to be about improving your conversion rates along the pipe. So from, like, let's say, from landing on your site all the way to checkout. So how is it that we actually do this? And this is quite important here. It's basically, it stands on 4 different pillars. The first is what we call exhaustive profiling data. So for us, the first thing that we need to do is understand that user, and the only way that we can understand a user is by gathering massive amounts of data about that user. So I'm going to get into a little more detail here later on, but basically Nethone has built technology which allows us to gather over 5,000 data points about a given user as they land on a page without them knowing, of course. So there's no friction for the customer whatsoever, but we are then permanently what we like to call profiling that user. So we're really gathering exhaustive data. We'll get into what types of data and things like this a little bit later on. Then, of course, we have an API that's going to connect to the backend of the merchant, or in the case of a PSP. So, for example, when we were talking with Straal, it's the connection between their backend and ours, which allows us then to be able to automate decision-making processes and also gather supplementary data, which is the reason why we call it a data hub here. So to give you a very quick example, let's say we're talking about an airplane ticket that's being sold by Lot Polish Airlines, for example. So if I'm a user, so my name is Rodrigo, I'm going to be purchasing a flight from Warsaw to Paris. And as I'm on the checkout page, Nethone is going to be, through this exhaustive user profiling data, is going to be gathering over 5,000 data points about me as I'm on the checkout page. Then I'm going to click on pay. At that point in time, Lot Polish Airlines is going to call the API, Nethone's API, and is going to be sending us supplementary data. So they're going to say, okay, the customer's name is Rodrigo, and he has purchased with us in the past. Actually, his last ticket was purchased only 3 weeks ago. And they're going to say that if I'm a frequent flyer, for example, and of course, explain to us what precisely is being purchased. So a ticket from Warsaw to Paris. So this is what this data hub is for there. Then what's going to be happening is that all of this data is going to be then combined on Nethone side. So we're going to have this exhaustive profiling data together with the API data that we put together, and this is typically called transactional data. So we put it all together, and then we have machine learning engines that we're processing over 10 million transactions a month, and we're securing over 10 million inquiries a month, and these inquiries have allowed us to build very robust machine learning engines that then are going to be able to produce insights for our customers. So the insight here, for example, for Lot Polish Airlines, let's say I'm a fraudster. So in that case, we're going to be sending the insight to Lot Polish Airlines. This person or this user has very high chances of being a fraudster. We would deny that transaction, for example. And then the last pillar is human ingenuity. And so fraud, as you can imagine, it's a human versus human endeavor. You're permanently fighting against other very smart and let's say creative players, right? And so that means that what we've noticed is that there's we haven't yet found, I mean, like it's not necessarily impossible, but we haven't yet found a machine that is able to really outsmart a human being in any circumstance. And that means that it's super important in payment fraud prevention to have somebody who knows data, and that's what's important. It's not necessarily about somebody who really understands fraud. Of course, understanding fraud is very important, but most important is to understand data. So for us, that's the reason why Nethone is mostly data scientists, actually, in terms of proportions, because for us, it's very important to be able to put a data scientist in contact with the client so that we are really able to understand very deeply the problems that are being faced. So that's the fourth pillar. So these are the 4 pillars that Nethone kind of stands on, and this is the way that we do what it is that we do. So of course, would love to get into more detail if you like, but that's a brief insight into who it is that we are. So now let's get into why is it that fraudsters are so interested in digital goods and services. So it turns out being payment fraud or being a fraudster is really the same thing as a business. And like any business, you need a repeatable process which gives you profit. And the faster you can repeat things and the more predictably you can go through each one of these steps, the more profit you're going to be able to make. And this is the crux of it when it comes to digital goods and services. So for example, here, I'm not going into very deep detail here, but let's say if I wanted to be a fraudster and I wanted to start a business as a criminal, let's say, what would I actually be? What's the process that I would be using? So first, I'd be purchasing stolen credit card numbers. So these can be purchased pretty easily from ClearNet, Darknet. I mean, there are lots of different ways to purchase them. They're typically around $3 each. It depends on the country, it depends on the bank, it depends on quite a few different things, but they're relatively cheap and easy to purchase. So you're probably not going to be buying one. You're going to be buying, let's say, 1,000 numbers. Okay. Then the second step is to test those cards. Now you want to go test those cards in a space where you have a very cheap product. So typically, for example, a very famous one in the past before they introduced a lot of security measures, but a very famous one that was used for testing was actually Skype, because you were able to purchase $1 of credit and they had very few systems to be able to block you from automating the purchase of $1 of credit. And what that meant is that you were able to know that out of those 1,000 cards that you purchased, how many of them actually are going to be getting approved. So, Thomas was talking about how to maximize approval rates. Well, and here it's the same case, but on the other side of the coin. So that means that you have 1,000 numbers and you're trying to maximize the number of those cards, or you're trying to find out which ones of those cards are getting declined because it turns out that it's blocked, because it turns out that it has no more funds, or any other reason that you can find. So out of those 1,000, let's say we're going to have 500 of them which don't get denials, and these are great. So now that means that I have cleaned up these cards. What I'm going to be doing is I'm going to be going and purchasing the desired item. So in this particular case, let's say I'm going to be buying, Call of Duty activation codes. So I want to be able to sell like access to Call of Duty, and each one of those, let's say, costs typically $10. So I'm going to go out and I'm going to buy as many of those that I can with each card and with all of my cards. So the best way to be able to do that actually is by automating all of this and like making it so that there's no human intervention while I'm going through this process. Okay, and then finally, what I'm going to be doing is, since of course I stole, all those cards are stolen, that means that it's not my money that I spent when I was spending $10. So I don't care if I now sell those same codes for, let's say, $5. And typically that means that it's going to be easy. I mean, we hope that it's going to be easy then for me to sell those codes for $5, since typically they get sold for 10. So that is this is sort of what it looks like. And the reason why digital goods and services is so attractive is because you can do all of this repetition. You can do it super fast. Okay, since the goods are, of course, are immaterial, it's easier to buy them and sell them much faster. So you can actually automate this and have the computer do all of it or most of it. And that means that you can make more money per card. And of course, that also means that you can process more cards. So that means that, really, digital goods and services, instead of, think about it, instead of having to wait for a Gucci bag that I bought for $3,000 and with a stolen credit card, and wait for that Gucci bag to arrive to a PO box where I'm going to pick it up, and then I have to go find a buyer I'm going to have to sell it for, let's say, $2,000 to a buyer, and then I have to go resend it. It's going to take probably 2 weeks or 3 weeks to have one cycle of all of this. So in digital goods and services, I can buy and sell the item probably in the same 15 minutes. And being able to do that makes this repeatability very, very high, which makes digital goods and services super attractive. And then finally, of course, that means that since digital goods and services have a very precise price, and everybody's used to purchasing them online, since of course they're digital goods, then it's actually easier to sell them at closer to the real value. So that means that here, instead of having to lose a lot of money, you can lose less money in the sale of that digital good than you would have to lose in a physical good. And in this, there are exceptions to that rule, but in any case, the most important thing is the fact that you can automate, and that repeatability makes all of this just a very compelling use case for fraudsters. And actually here, I wish that when I was building this slide, I didn't think of this, but I wish that I would have put a little block around all of this area, around these 4 blocks here. And one of the things that fraudsters permanently need to be thinking about, of course, is making sure that they're hiding their identity. Because of course, if they're playing all this game, they don't want to make it so that it's, first of all, easy to find them as a person, because it's very possible that what they're doing is actually illegal in their country. It depends on jurisdictions, but it might be illegal, and in which case, of course, they don't want to get caught by the authorities. But also, they're going to be wanting to anonymize their session, because if I'm not anonymous and I'm always purchasing as Rodrigo, the website is going to be it's going to be super quick and easy for the website to start blocking me. So that means that anonymity is very important when you're conducting all of these different tests. Okay, so So how can you address these issues? So like basically the answer is in the question, sort of, okay? And this is really something that at Nethone, this is really the way that we're thinking permanently. We actually have a small team at Nethone that only is looking into, let's say, how fraudsters are actually operating. And the reason for that is because no matter what it is that you're doing, you're always leaving breadcrumbs, and you're always leaving kind of like hints along the way. So for example, here, in the same step here. So in order to be able to repeat things very quickly, you're gonna have to do either, let's say, maybe some mobile emulation to be able to automate things, automation, of course, scripting, and so all of this is gonna be used, all of these different components are gonna be used to be able to actually render this repeatability very high. And the question that at Nethone we ask ourselves is, okay, so we know that the fraudster is going to be having to automate and repeat the same action very quickly in order to make more money. So how do we actually just catch that? How do we make sure that we are able to then observe that happening, so that when it is happening, then we know that there's very high chances, let's say, of there being a fraudster connected? Okay, so that's always what we're asking ourselves as Nethone. So in the use of the card on the desired item, so for example, you're going to be, and I was mentioning this, let's say, anonymization, right? And so in order to anonymize your session, you're going to want to be going through VPNs, of course, but you're also going to be running virtual machines most probably, so that you have a different device fingerprint every single time that you're connecting onto the service. You're going to have a completely different device fingerprint, and this is also very important. Also, you're probably not going to be connected through your personal Wi-Fi in order, once again, to separate yourself as much as possible from this criminal activity. So you might just be then using a public Wi-Fi, for example. And of course, here I put Tor, and like you could be using Tor, and actually you could be using Tor in a way which is really non-obvious. So you could be using Tor to then connect to a VPN who's then connected to the service. So that means that the end server, so the merchant server, might not in a very obvious way notice that Tor is being used. But it is obviously throughout the pipe in order to completely anonymize themselves. And if that's the case, there are gonna be certain breadcrumbs that are gonna be left there by that. And of course, when you're selling the desired item at a loss, the idea is like, and then here I'm kind of alluding to something that happens often in digital goods and services, especially platforms, where you're gonna have a two-sided platform, and like typically, for example, a platform like G2A, for example, or Kingwin. These are platforms where a fraudster could very well be on both sides of the transaction. So they could be selling the game, be selling the game and be purchasing the game. So as you can imagine, like what I would want to do is I would set up a game that, let's say this Call of Duty game that I was giving as an example. If it typically costs $10, what I'll do is I'll just put mine for, let's say, $500 on the platform, and then I'm just going to go and buy it from myself. And this is a nice way to be able to then generate these transactions, right? And of course, when you're doing that, that means that you're probably going to be like, it's the same person, okay? And they're probably going to be connected in the same way. So, and this is why it's interesting to have such a broad fingerprint. So to be able to pick up over 5,000 attributes is super useful, because that fraud, like if I was conducting that game, I'm probably going to be using the same machine. I'm going to be using a virtual machine, of course, but I'm still connecting to the same Wi-Fi most probably. I'm still going to be using the same VPN. I'm still going to be using some of the basic connection types, let's say, or let's say behaviors, very similar behaviors on both sides of this equation. And the idea, of course, is then being able to track this and being able to see when those two things are happening from the same machine on both sides. And here, this is where, and I wanted to focus, if I can go back here to this slide here. So I was talking about exhaustive user profiling data, okay? So this is what this is about, okay? So basically, since we're gathering 5,000 data points, we're basically picking up these breadcrumbs. And that's what it's really, that's the power of Nethone. And the idea is not just to pick up those breadcrumbs, but to be able to use machine learning to be able to, how to say this, surface those breadcrumbs and say, hey, you know, this is an interesting detail, okay? And the conjunction of those two things is extremely powerful. So what kind of data are we gathering so that we can basically go back to these phenomena that I was talking about earlier? So we're tracking, for example, hardware. So how, like, what hardware, what physical object is the user using to connect to your service? Okay, so you see here a lot of different points here, but I'll give you a quick one. So typically, you know, a virtual machine is typically going to be emulating a graphics card, and typically it's going to be the same graphics cards or the same graphics engine, let's say, that is going to be emulated by each virtual machine, for example, by the virtual machine software. And so the idea is to be able to then look at the GPU and then see what that GPU is being used. So of course this isn't as simple as that. Is the combination of a few different points, but it's just to kind of tell you why the hardware is important. We're able to see how much stress or load the processor is under, for example, or how much memory is being used by the browser. And all of this is actually super useful to be able to understand whether there are, you know, parallelization happening. So there's a lot of things happening on the machine at the same time. There's a lot of different quirks there that you can pick up. So that's the hardware. And then we're also looking at how that hardware, so how the user's computer is actually connected to the service, so connected to the merchant's server. And that's what we call network intelligence. So I was talking about it a little bit earlier. So, but of course we can be seeing whether they are, they're doing tunneling, they're going through VPN, they're going through a proxy, and being able to actually just pick up how they're connected to that network and how they're communicating between how that machine is communicating to the server. So that's the second piece. And of course, the third piece, and very important, is how the user is actually behaving. So are they typing at all, for example, actually? And if they're typing, is it quote unquote human typing? And we actually have built technology to be able to detect that, whether there is, let's say, we like to, like, for example, that's what we call the keystroke dynamics. But to get very particular, of course, keystroke dynamics, like, have a lot of features within it. But we can be looking at things that are as simple as, for example, negative flight time. So typically, if you're a normal human being, when you're typing, at one point in time when you're going to be typing, you're going to press two keys at the same time, and that's very common. And that's like, and the keyboard still functions, by the way, obviously, when you're doing this. But the thing is that if you're emulating keystrokes, you're probably not going to be doing that. And so for us, it's looking at different things like this allow us to be able to understand that behavior a little bit in a deeper way. Of course, then there's simple things like clipboard usage, accelerometer, and gyroscope, and things like this. But and all of these things are always pointing towards fraud. And then once we basically once we gathered all this data, we're going to be using machine learning engines to be able to then differentiate and look at, like, basically surface all of the risky features, let's say, and then be able to issue a context-rich recommendation. Okay, so it was a quick presentation, but I hope that you got a little bit of a sense of how basically this here, gathering all of this data and having very smart analytics, allows you to be able to pick up the breadcrumbs that are left behind by fraudsters when they're going through this cycle. And for us, thinking about fraud in this way is very, very powerful. That's it. So if you have any questions, please feel free to ask away.
I think there's a very interesting question about my favorite topic, GDPR. Is collecting behavioral data GDPR compliant?
Yes, so that's a great question. So the short answer to your question is yes, because it depends on what data you're gathering. So first of all, Nethone is always within GDPR considered a processor. So that means that we're never going to own the data from the merchant. And that also means that we can only use that data for whatever it is that merchant and Nethone agreed on. So typically that agreement is very narrow and it's for payment fraud prevention. That means that if I gathered, let's say, if I have emails, which we don't gather, by the way, but like if we had emails, we're not going to be able to sell those emails for marketing campaigns or something. Okay, so that's the first piece of the answer. And the second is actually that for fraud prevention, gathering very specific data specific to one individual is not very useful at all, because at the end of the day, when you're doing fraud prevention, it's a numbers game. Thomas, you were saying this a lot on your side, but for us, it's the same thing. It's all about, because I'm not going to be connecting as the same individual. I'm going to be connecting as a similar individual, and that's what's interesting to be able to catch fraud. So for us, having my first name and my last name is completely irrelevant. So for us, actually, we actually drop all of that data in order to keep that data anonymous for us. So those are the two things that we're using to be, let's say, GDPR compliant. And of course, within our agreement, we have a data guide that says exactly what type of data we're gathering and why we're gathering the type of data and things like this, so that you can have full compliance on your side.
Perfect. Is there any other question to Rodrigo?
Okay, it seems like that's it. I'm getting messages here that there's nothing else. Okay, so like I'm assuming that the teams are going to be in contact with you to send you a little email. Maybe you want to give us some feedback on either of these presentations. But in any case, also if you think of any other questions, of course, it would be a pleasure for us. That's what we're here for. So you have either be it Thomas or I, we obviously know this space quite well. So if you have any questions, feel free to direct them to us.
So thank you very much for your time and listening to our presentation. I hope it was useful for everyone. I wish you a wonderful day, and over to you.
Okay. All right. Well, thanks a lot. Thank you. Have a great day, everybody. Bye-bye.